It's the Crypto Sniper. Yes, what am I going to tell you today? These are biblical times. You are looking at a Judas rally, in my opinion, for Bitcoin. Something we predicted down here and shared on Twitter for free views. You will find a low coming soon for Bitcoin was the tweet, and expect a rally. Expect a rally for crypto. Do not trust this rally. If you're a short time frame trader and you want to try trade this long on the upside in a big bear market, good luck. It's not my game. I don't focus on that. I stand back. I stand back and let the market do what it was going to do. This overall was never likely to run the previous low. It was a bleed out. It had a basing descending grind line. It had a lot of characteristics that had us believe that there was going to be a pop to the upside. And this morning, you will have seen that pop to the upside has taken place. And you are now trading 21 when at one point you were trading 18,600, representing a solid 3,000 if we get to 21,600, which I'm pretty sure we will, but around 2.5 for now in terms of dollars. In the same way we warned you, this basing ascending grind line would lead to a downside break in crypto and that you should not get too optimistic. Everyone was telling us what permanent bear we are and how silly we are, and Bitcoin is bottomed. Peak inflation, peak dollar, peak everything. Well, we have news for you on the dollar, and we'll be updating you on that. News no one else has said. Not all the bulls, not all the dollar bulls, like Brent Johnson of Milk Shake Theory or anybody else who's dollar bullish. No one else has said this. We said you will have a gestation and pause and progress decay period. Key HVF terminology and phraseology. Understand what it means. Go to www The Market Sniper. Become part of our community. See our materials. See our updates. Participate in our crypto, our FX, our all markets environment. Building wealth in reset times. So we closed our ADA shorts with a nice little spill over there from here down here during Bitcoin spill from here, and we are expecting it to rally. We are going to do the following, and we can always be wrong, even when we've got some things right. There are a couple of things that could happen. The main priority, I would argue, is that we're going to see a run up to somewhere around the 24K to the 22.5. And it depends how much time it takes for it to get in that direction. I want to warn you, as nice and as sexy as that little candle looks right there, it's rarely followed up extensively for an extended period with those candles. So you had 2 here. That got everybody a buzz. You got 2 there. That got everybody a buzz. You had a number there that were broadly bullish, although there were a couple of in-betweener candles in there. But generally, it's not a pump chase market. If you weren't already long at the break of the falling wedge at 19.4, or when we called it further lower at around 18.6 on Twitter and said it's likely that you will lose that low and go on up. So what do we expect to have happen? This is what we expect to have happen. Our primary scenario is something like this. A rising wedge, depending of moderate momentum with a little bit ups, little bit downs, little bit ups, little bit downs, little bit marginally higher ups and little bit downs, a little bit further ups and downs, and then another setup to the downside. That's one of our scenarios. Probably one of the leaders. However, there is also a possibility, and it can't be ruled out, that we'll have a more sustained period of softness on the dollar. This will lead to recession narrative being more dominant than inflation narrative. Inflation narrative, that's old news. Never mind the inflation. Recessions, pain, suffrage, gas prices, Europe, yada. What do you see out of that? You will see a more prolonged. How would that look on this market? Well, we'll cover you with a scenario for that. This could lead actually, so for our inverted scenario HVF that we were first describing, in essence, the call is this would be one of the possibilities. This run up from around the 17,500s to the 25 and a burger and Coke. Then this comes out and taps out somewhere over here as an all secondary high. I'm thinking in and around 24k, maybe a bit below, maybe a bit above. Another fairly steep sell-off, and then we get ready to rock and roll potentially to the downside. That is scenario A. Scenario 1. That is the likelihood or the possibility. We don't know how much possible, but we think there's a decent chance that you will form a flat-bottomed inverted structure that will later do something like this and lead to a sell-off. The other alternative is you could run this high. What was the high? Let's see it. Let's see it. Let's see it. This is Finex. This is Finex. So if the dollar has a more protracted period of delay, you're at 25,205 here. It's possible that if you went for the inverted, you could be stopped out and you run this high. What would that mean? That would mean you're having a more larger general structure, which will make most Bitcoin maxis a lot happier. Something like that, for example. This would point to an extended rally on the Euro USD, more than what we've considered as our base case. Maybe some more rallying on the Asians, which have been absolutely hammered against the dollar. And this would point to rates dropping on the treasuries, a lot more dovish talk out of the Fed. Maybe we won't go so far, so fast. So this would go like this, maybe bounce around a bit at the halfway mark, have another surge, bulls go peak mania, peak bottom calling, have a mess around in here, squeeze higher, have an unfortunate little dip. Inflation numbers still stubbornly high, grind, push up. You could even have a pop out the top. And then you have a larger breakdown to the downside. So that is a bigger time frame and a longer protracted period of dollar weakness that would be drawing it out. That would probably see only this correction take place cusp of the year. I have a feeling October going into November is going to be a very, very ropey period. So I think this rally occurs during September and into October. But as you start approaching November, we are back down at these legacy levels. We did tell you the 4 key levels of significance here. I've said this so many times. You probably should be finishing these sentences. The previous all-time high is through this price behavior. Yes. The second interim of the first cup gold nugget is through this price behavior. Yes. The head and shoulder target from the 69k high. I should go up a big time and show that to you, but I've said it so many times. And we can put the lines back on. This head and shoulder in here, that target was also made. There were a lot of targets, hence why you might get a longer stall that goes on down. In fact, I speak incorrectly. That target is 15k. Apologies, one of the levels we think next. It was the bear flag from here target. That was the lowest one. The legacy high, the 20k round number. That's it. Those are your 4. We still await the head and shoulders target. We still await the key levels of significance of 15k. Will it happen? So this looks like a much longer, it even has longer genes to it than this period. So you could be sitting in a real nowhere land, little bit up, little bit down zone, and bulls eking out theories about marginally higher highs and marginally higher lows and believing they're therefore in positive Dow theory upside, only to be smashed by what is actually a grinding continuation pattern that is pre-exhausting before another sell. This is why I'm calling it the Judas kiss, the Judas rally, in my opinion. It cannot be trusted. So how do we get to be wrong on that? That's a probability or a possibility. We think the probabilities favor the continuation pattern. How does it get wrong on that? And how would Bitcoin fix that? How it could fix that is it does this. And this remains impulsive, comes up with real momentum, hits the 25k again, and the legacy target for the original head and shoulder. That's from the head and shoulder from the 64k to the right, to the left of there. And then as a mild rally, a mild pullback correction before squirting up to another key level of significance like this. That would start to represent bottoming price behavior. And then you would start to see potential for recovery. This would make that a W bottom with left shoulder here, right shoulder there, nice neckline at a key level like 30K, and you would then have a target all the way from the upper 17s to 30K to project to the upside. That would then see us be prepared to be bullish, and these would be logical rest areas for continuation patterns. All the way along, we keep the key levels of significance. If they were significant a long time ago, they will be significant again. That would be a representative of a reversal. So we need sustained momentum to at least the same level here or close to before a moderate pullback. That doesn't mean it can't do a zig and then a zag up. That would still point to sustained momentum, providing overall the momentum is brisk. Don't forget, you had quite a sharp and ugly sell in here. You need to negate that with the momentum swing that says that was a final capitulation. We've got real zip. All the shorters are out. Tooth and nail. No more Bitcoin people wanting to sell. I upset the maxis, the Bitcoin maxis, by comparing their chart to the chart of ARK and showing that ARK in fact was leading and less high beta than Bitcoin. It could have been any tech stock. It could have been many tech stocks, not necessarily all of them. Just to illustrate that the performance during that period under review. Remember, everything can have a bad spell of performance. Gold has had bad spells of performance for longer periods under review. So keep it calm. Don't lose your head. It was provocative, and it was intended to be to highlight how bad Bitcoin has been doing for that particular March 2020 period till today. Go and check that video out again. It is the last one we did on the Crypto Sniper for you. This overall move, whilst encouraging for Bitcoiners, is not typical of a major surge that I see is going to take you too much beyond this. So I am in case A, or number one, let's call it scenario A, where we get more likely an inverted HVF than the bigger macro. But there's another half to this. This is, after all, Bitcoin US dollar. That's what it says up there. People don't realize trading Bitcoin is like pairs trading. I've been doing this for years because I traded FX for years. But crypto kids think they're just dealing in Bitcoin. No, they're not. You're dealing in a measure called the dollar as well. What is the dollar doing? And you know that I was the first to tell everybody it's not about your stock to flow model. It's not about what you think is important for the crypto and why it should all be happening. Most of those models have now failed, and you're at lower lows, extreme buy, must absolutely spend everything you own, buy Bitcoin, only to go lower. Those people never respected macro. They never respected that the dollar could be weaponized and is part of the military industrial complex, only it is an economic and financial weapon. It is not a bomber, but it is close to that because it is destroying the rest of the world with its pursuit of inflation. And that is having real effects, and interest rates are going up. So we said this target being made on the red upside HVF, and this is not something you will have just heard for the first time here. We said Brent Johnson's got the right idea with the wrong timing. We expect a down leg first in this structure. Let's go up to the weekly and get a little bit more of that structure. But he has the right idea in calling Triffin's dilemma for the currencies, just wrong timing. And we said he will be proven right in time was our suspicion. W head, bottom, 94.5, real turn. We said if this doesn't run the next low, we're probably on for the reversal. It was quite a deep pullback. We had that low level as our stop point. We always have a level where we're wrong. People say, you talk so much like you know and you're arrogant, some of them. No, we have a point where we're wrong. We think we're good, but we have a point where we're wrong. If we have a point where we're wrong, you can show up on the comments and say, you were wrong. You said it shouldn't run that level and you were wrong. That was our wrong level. It rebuffed our wrong level, W bottomed on our wrong level, come up and then kissed the 94.5, break, run, and the rest is rock and roll history, my friends. This is about as determined a move you've had in the dollar in decades in terms of upside. When you count from the lows of 89, which we said is starting to get close, it needs to stand, right the way up to our target, which was 110.308. We redrew this setup and sacked our original draw with additional information with post setup analysis. If you understand that, you're probably a member of my community. If you don't, you need to go to themarketsniper.com and realize that you can learn to do this too. And this is exactly what we do. It's what we teach. It's what we practice. We practice everything we teach, and you can watch us do it live with regular media daily updates for the community. What I am doing in terms of my trades, why I closed my ADA now, because I expected this rally a couple of days ago. And why watching the dollar was the smartest thing I could do for knowing when Bitcoin was likely to rally. That is a key rejection after running our target. This could do like gold, I don't think so, but it could have a sustained pullback. It could come back to 105, take a while before it winds up and goes again. If in shock and horrors, it could come substantially down even further. Again, I don't suspect that one, but I do expect a period where you are going to get your peak inflation callers. You are going to get your buy bonds, wear diamonds callers suddenly coming back on the scene. You're going to get stock market rally. You're going to get Bitcoin rally. And it's all over. The tightening cycle is over, they will tell you. You have lived through it. It's done. The war is over. Meanwhile, the first wave of attack at best is done, in my collective opinion. And the charts of the USD Korean won, with their very clear structures, clearly have a blow-off loss of value. The yen having lost so much. How brave a man. Everyone says, I'm so contrarian. I'm calling a stock pump on a pivot. That's not contrarian. That is absolutely everybody. Absolutely everybody. And they're all rushing to call peak all the time. This is top calling foolhardiness. This rate will come down a bit. Why? Because it's the 3% level. That's the blue line, the 3% level. What is the red and green line? It is the key level where we had an inverted that was the beginning of the post-GFC super interest rate environment to reflate failing Europe and America and Canada and all the others on the housing boom. You don't think we're just going to walk straight through that level without needing to wind up a little bit. And they will all call peak everything during this period. And the game is always continuation. You do not snap back from 0.33 and hustle over to 3.5 in under a year unless you are experiencing a major trend change. To kill the old system, they need to kill debt. It is a debt-based system. How do you do that? You devalue the debt, the rates go up. How do you get that debt under control? You spoil currency, thereby continuing to proliferate, but that is yet to come. And the Fed is going to hold off proliferation on account of last time we did it, we brought double digits inflation. Now we really need to kill the demand, and it might hurt. After telling you they were going to engineer a soft landing, they now start admitting this may hurt, and eventually they'll say, to ensure we bring this inflation down, we may in fact have a hard recession, and in truth they'll be talking about a full-blown depression. So they always leak the truth over time. As your conditions get slowly better, they say a mile more. Walk me a mile with that pack. And when you're at 0.9 of a mile, they tell you a mile more, a bit more pain, a bit more effort for me, a bit more must do. So they leak you the truth. They never tell you you're going on an 11-mile journey through the mountains and the hills with no water and no rations, and you will be bled and bled and bled. And the scale of the fullness of the great task that they will be putting you through, having created this inflation, blamed Russia, blamed Ukraine, having created this inflation with stimulus, quantitative easing, mass proliferation, bailouts of banks, bailouts of mega corporations, buy-ups of bonds to keep the bond markets artificially inflated, of which yield curve control in Japan is the most obvious version. Let me say to you, it's my express opinion that this USD Japanese yen will go substantially further, but just not right now. It will fizzle for a bit. And if you're shocked by that, you shouldn't be. Look how that thing has climbed. We are on a monthly chart. You were as low as 101 in the 2nd of March, 2020. You are 145 at the height. That is a 45% devaluation in a currency in around 18 months. A major currency. After the euro and the dollar, the yen traditionally has been considered the most significant other. Yield curve control, terrible demographics, and there's no way they can stop. It's my long run anticipation that you will see this run into 200 pluses, 230s, 250s and beyond in a super spike of devaluation. That is coming. That is part of destroying the debt-based system. How do you think when the dollar is performing like that, which will be a blow-off event, and this is a small shooting star, it points to a moderate rest, not the biggest in the world. That was far larger as a wick than you're getting here. Just as a general rule, the larger the wick and the bigger and the blow off and the more robust the rejection, the harder and the deeper the pullback. You will not be having the same period like gold has had since the 2000 run, but you will get a rally out of the euro. You will get a rally out of the euro until those energy stories and those lockdowns start to cut in. And once that narrative takes over, my friends, wherever you've rallied to will likely sell off. Another fake rally. You need a trade in the direction of the macro. Don't try to have it both ways. You will suffer from confusion. A macro bias is your friend if validated, justified by big time frame charts. This is where it's all going wrong for crypto, bringing it back to crypto. So that is what we expect of Bitcoin. And that, regardless of ETH merge and everything else you've been told by Arthur Hayes and prominent crypto tweeters that are all ready to talk about the ETH pump, everybody only makes money with buying, and therefore they're all so keen to tell you which is the next one you should be buying. Ethereum will rally. It will rally substantially. However, do not be fooled. Do not be fooled. Long run, they have a plan for this token. I have no doubt at all that long run, they have a plan for this token, and it can grind well back up, potentially even to the 2000 level. Doesn't have to, but it is my expectation. If Bitcoin doesn't run 25, remember at 25, Ethereum was $2,030. That was the magic. Now that doesn't mean if Bitcoin goes to 25, Ethereum couldn't be higher and show relative strength during that period, but typically that's where it is. If I'm seeing Bitcoin in and around 23.5 to 24.5 and ETH is outperforming, it can get back up to here, but be very, very careful. Be very, very careful. I wouldn't count on it, and I would not be trading longs anywhere on this crypto landscape. We have given you ADA. There is another excellent setup. It is in our community, I'm afraid. I am not releasing it. You could find out. You want to book a call, jump on to themarketsniper.com. It is the best of all of them in terms of structure, in my opinion. But I will talk to you about ADA, which is one I have discussed and disclosed. Sorry, I have Charles Hodgkinson friends and ADA friends. I think this turns out poorly. I think in and around the 55 levels, and roughly where I'm pointing, could be another localized high for ADA somewhere here. That idea is totally rebuffed if it runs this. That means longer term pause. Not all patterns will hold. Some will break up with a longer run. The idea is over on ADA there. We closed our shorts here as the dollar made its target at 110.3 and it had spat up through through to 111 on the Dixie. Since then, it's gone up. So we've benefited from that short into here, and I only wish to trade it short. I will not trade the longs until we are in a confirmed bull market, in my opinion. And as long as we're in a macro bear, I trade the shorts to the bear side. It's called simplicity. It's called wanting the probabilities in your favor. I get the tweets, you must have lost so much money to be so butthurt. It's been an awesome bear market for me. Sorry. Bag holders, sorry. You're a bag holder. It's been an awesome bear market. Money has been made. So much more could have actually been made, but plenty has been made. But I'm very grateful for that. And I think you're going to get another go. Give him another chance. Give him another chance. It is coming, my friends. That is my opinion. We'll see what happens. I also think it can start rounding over out of the wedge and getting choppy here. We will see. We are calling off the ADA short, and it won't cost me any money. I am not short. The earliest I would be short if I was to take early entries would be somewhere in that box, and I think I'd wait for it to be a little higher. That I've drawn it a bit low. It's almost there already. Somewhere around here, and it could happen. It could take a while to happen. It could, extend to here. So this could all roll over and be more like that in time. So understand in principle what I'm drawing. I am calling Judas rally. Participate long on this at your peril. It's a Judas rally. You can have a look at ADA. On the dominant side, it wants to find some strength relatively, and it's been having a little bit of pushes up. We will see. So shown recently, but it bled out horribly from 4.47 down to 1.15. So for those that say this looks bullish, I have to say that looked bullish, that looked bullish, all of that looked bullish, and you went lower still. So it's been two surges and another little bit of a surge at this point. Do not be fooled. It may turn, it may hold in dominance, but you could have the same level of dominance and the whole crypto market taking the dump, and it just gave you the clean pattern. So we will see. We have others that we will short. Others that we have got into quite regularly for you was over here. We've regularly updated you. It's now dropped so far down on the market cap list that you'll be relying on bot activity. Look at that for a low 2, turning along with Bitcoin, but not as much. We will see where this tops out. It might be an interesting short at 1,000 again. In and around $1,000. Stop needs to be here, 1,200. So don't be in too soon. You'll only be able to move that stop once it turns around and goes down and comes back. There are heavy volume by price data here. We do volume. Maybe guys, hey, you don't ever have any volume on your charts. I do volume analysis entirely at a separate level for a specific range of data horizontally. Histogram only gives you so much, and it gets in the way of other analysis. This is quite high slung. We'll see how much stacks up down here. This points to the 979, 1000 area being quite heavy. Let's wait and see once it's walked its way back up how that develops. So you want to monitor that. If that volume by price starts to get heavier, most of this price range now will be fattening up the lower histogram. So it's in development. At the moment, the core level for the rising wedge was mainly in and around here. That means a lot of volume happened here and not much here. Let's have a look at it. Histogram volume. See? Very spiky. This is why the bots were the ones getting me out down here. This is wash trading central. Here's your volume. There's your volume. And there was your volume. Spiky and short. Watch out. Retail is hurting, my friends. I remember the 2018 crash of Bitcoin at 6K when everybody was calling a bottom. I literally don't know anybody else. Possibly Tony Vase. Who called this big event over here a downside sell-off. After that, no one wanted to come and play with our community. We made money on it to the short side and everybody was angry. And there was only bots masturbating with themselves during that period. No one wanted to believe that would go down further. We were down at 6K from 20K. That's a substantial correction. This is the bottom. Peter Brunt, all of them, compound fulcrum, he said. No. I'm sorry, guys. It didn't happen. A lot of people will be fooled again. Keep trading. The bear is longer than you feel. There's always a twist of a knife. This is to save you, not to demoralize you. It's to save you. Quite a nice rejection, it looks like, on this level. Let's see how this candle closes, and let's see how the follow-through is. Remember, if it goes up super fast and past this, big rest dollar. So, what other tokens were we talking about? We went past Maker for you. We had a look at Elron, some of the old faves. Again, all of crypto is in the same state. It is a little bit less volatile. Now you can also get, I said a wedge, you can also get a flag. That was more of a squeeze. This could be rectangular. So you could get a rising wedge like that, which goes beyond. That would be quite a big wedge. Could get a flag. Or you could just get a squeezy Japanesey. I think it's a bitter winter, a winter of discontent for the Northern Hemisphere with energy and so many other things coming under challenge. What about that Bitcoin mining and energy-based problems that might still be happening in some of these countries where grid down could happen? Who knows what new story could befall you? Be careful out there, friends. All the risks going into this winter with hyper overvalued equities, in spite of the correction that has already occurred, could be to the downside. We will see. We will see. I will let this market prove to me that this is a bottom, and you're going to get a lot of bottom callers. You're going to get a lot of let's go pump. The scammers want it back. Everybody wants it back. What about Hex? Hex. Let's talk about Hex. I get comments. What about Hex? What about Hex? So I said to you, and I will repeat it, because I don't believe anything material has changed. If this bear sells again in the manner that I expect it to, remember we called the top on this head and shoulder right up top there at 50 cents. I will drop the time frame in a minute. There's a head and shoulder in there. And we said this is not the low. At 15 cents, you will go lower, significantly lower. And I've said since you're around here, and you've been in this period for an extended period, we said this is not a low. Why do you think Richard has not released his new project? He doesn't like the market environment for releasing PulseX. He doesn't want a lot of bleeders on his Twitter channel on PulseX and Pulse. He wants the early doors of a new bull. He wants that. Woo! That's when he wants to release Pulsykins and PulseX. He does not want what I am predicting. Possibility of a rally for Hex can go to 6.5, etc., etc. But longer run, I see it trading sub 1 cent. Listen again, sub 1 cent. And I can say to you, he will not want that as an environment for releasing PulseX. You are going to wait a lot longer if this goes down for that project ever to launch. And who knows what will have come out that might have superseded it. The opportunity might be lost. I'm not saying it will be lost. Could be. Could be lost. Could be good. I don't know. But Hex, that is not good bottoming call. How do we be wrong about that? What kind of price behavior do we need that would make us think again and say, this could be the bottom? Well, you would need some upside momentum of some need. You'd want to make a higher high. I would actually prefer some pattern. So a small pullback when you get up to there. So a 7 cents neckline, for example, because you did have a bit of a shoulder in there. I'll drop the time frame in a minute. You get a W. And no, Richard, you didn't call the top of Bitcoin at 64K. If it traded 69K, 64K was not the top. And it doesn't matter for how many days it was above 64K, it was not the top. Let's be precise about some things. Love you as much as I do, it's not, lose a little bit of perspective. I will also show you Hex against Ethereum. So there was your head and shoulder. Complex head and shoulder. No one else saw it. They don't have the theory. We do. Click the link. Go find out. And by the way, this is what head and shoulders do. You are in and around the upper 50, just through the 50, 51, 52. And the neckline was around 38, I think. I can't quite recall. Let's actually see if I've still got the draw on there. Yes. Neckline, 37.5 and 50. So that target was made, and strong dip to the funnel, the last upside funnel, bounce on the funnel, ran that funnel. That's why you got a massive broadening structure at this price point. Key upside, HVF, that was being squeezed out. Now that it performed to the upside. Down, 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 down. So let's show you Hex with. Remember, with, that's what Pulse is supposed to be replacing. Whoops. That's what we take off. Let's go back to the reg scale on that. So that was Hex. We said a big loss of value to Ethereum. Smash, smash, smash. A massive loss of value to Ethereum. Look at that volume by price and look at it pipping out the lower end of the range. Look at where all the trade is happening. And this was a spike low. So to pull the volume by price right down here, there were only 2 spikes and a touch of that. But most of that volume is being traded along the bottom, my friends. Hex is underperforming Ethereum and has been for an extended period. Since, you guessed it, that head and shoulder that we called, yes, you guessed it, go Google the Hex on our channel. There's the target being made, community discussed, big sell-off out of that. Massive overperformance to that head and shoulder, and now heavy. Despite the fact that there were a couple of spike rallies, heavy. There's the bulk of your volume, guys. And you are now below that. That's now resistance to get above. Hex with. Continued underperformance from Hex against with. Absolutely. Absolutely. So it's not good news for Hex against Ethereum. Let's be fair, Ethereum has been one of the stronger cryptos during this period, but this is a bleed out. This can roll all the way through. All the way through. Can we draw that like it's still in? We can. It can go out the bottom. It can be type 3. DeFi, I don't know. It's not exactly flavor of the month right now. So 1 cent is being called. This is low vol. Bitcoin is rallying. I would expect first a rally here. This is key levels of significance. 1.1 and 0.07 tenths of a cent. These levels will be seen. Each HVF funnel has been taken out. There, and here. This was the fulcrum one. That was the origin of the whole great big pump. And I benefited from that. I'm not a hater. Thank you. Nice to participate in the upside. Thank you so much. Great stuff. But you are looking at a potential round trip. Log scale that. And in time you will see. Pain in Hexland. You could have sold at 50 cents. You could have sold at 37.5 on the neckline being broken. You even could have sold at the target, which was around 12. Now you're at 3.9 cent. And I'm being telling you that you're going to go into this zone. It's a bold call, but that's what's coming. And then Pulse X and Pulse will be viewed in a different light. There will be a lot more jaundiced an eye. Let's just suggest that in terms of possibilities. It will be a different game, a different day. Who knows what happens on your pledge? Maybe it become illegal and your pledges will not be returned. Who knows? I'm not saying that's going to happen. I don't think Richard's dishonest. I'm not saying that at all. But events will change. Central bank digital tokens will come out. New rules about who can issue what and are they registered and have they done this. But it's not a security. But, wobble and weave. I don't know. You wobble and weave too much, you get too smart. These guys clip your wings. That often happens. But we'll see. Hope to be wrong. I've got Pulse X and Pulse coming. I'll take 50% premium on my Pulse and Pulse X. I'll hand over the wallet. I'm a straight up honest guy. I'll take it in USDC and I will not risk the run and all the upside of those 10Xs and 100Xs or 25Xs. All yours on both. Contact support at the Market Sniper to stockpile your Pulse X and Pulse tokens. And I want it to succeed. May you make great money. So that was Hex. So that will keep the Hexicans quiet for a while, although I'm not sure the right kind of quiet. What other tokens did we want to talk to you about? Wow. Sol's getting a rally after hitting the low 30s. Man, this guy, the top call. You want to brag about a top call. 260 on Pulse. Man, oh man. Man, oh man. Community member that took, I think, about over half a bar at the top on that target. Bang. That red circle from there. Boom, boom, bosh. Great stuff. Love to hear about our community members making money. That was one that cared to share. Many others on that. The peak ball. Now, down here. Oh my God. And is this a good structure? Is this super strong? No, no. You could look at shorting Sol as well. Probably go down to the next funnel down here. These green and that red. You could have, again, same structures. All of crypto is very much the same. And it's being dominated by the macro and dollar. And people hate that. Because they know so much about crypto. And I don't know about, what Lynn Alden knows about how they mine and Lightning Network overlays and is going to, not centralize it or will centralize it. I follow the money in the charts. There's so many people that will know more and they will lose money because they'll buy narrative and story instead of seeing what's happening. They will not appreciate that the macro is the dominant force here. And I'm afraid I'd rather spend my time understanding the directional flows of macro, the money, and the dollar for best understanding and trading my crypto than reading 30 white papers and all the notes and who did what and which jockey is the best, etc. Anyway, so that's crypto. Remember, we will be releasing a couple of early tips on Instagram. First one might be coming in the next few days. That's on @themarketsniper. So follow us on Instagram. Short form content, much shorter than this. Many people say, you could have said that in half an hour or 10 minutes or 5 minutes. Okay, sorry. We wanted to show you. We went past a few others. There's the Ripple case, which I think could prove beneficial for Ripple. And they might overperform. They could come past this point, 41. And that could be, for Ripple, a particularly bullish development. Big seams of resistance and support currently at the moment that they haven't held below over here or there. We'll see how conclusive the SEC type thing starts. If Ripple fails to run the 40.96, this current high, and goes only part of the way and then it has a churn and a bit of a fizzle back, I'm afraid I don't see it ending. It needs to come up strong. It needs to get to this level. It needs a little pullback and then we can talk about reversals. And that's the same for all of crypto right now. But there will be news around Ripple coming. I think it's the 19th, 18th. Go check SEC. I'm not sure it's going to be a clear win. But I think in time, Ripple comes out of that one. But I'm not sure they're going to give you everything you want. Okay, dollar is still the deal. Judas rallies until proven otherwise. That is the kiss of death They will hang you and empty your pockets. 30 pieces of silver, was it? I don't even know. I can't remember. I should get my Bible out. But these are biblical times, and there is so much risk to the downside that you'll see people liquidate anything to get money. Imagine your bank was hacked and emptied. You will sell your cryptos for what little dollars you can get. Potentially, that outcome could occur, or others, if your energy bills go up 5 times, etc., etc. Otherwise, you get switched off. All of that could be happening to you. Okay, catch you next time. Thanks for watching. Don't forget to like and subscribe, and also jump on themarketsniper.com, book a call. We have some availability at the moment, but we've been exceedingly busy. Welcome to all the new community members. Congratulations. And we love to be able to help you go forward, building wealth in reset times, protecting that wealth in reset times, and forming community, which I am going physically and looking at sites where we can escape future watermelon communism lockdowns. That's right. Catch you later. Bye for now, guys.